This is the luxury world. Get inspired with us today and tomorrow. In the first quarter of 2025, a striking event occurred in the Rolex secondary market. A newly released yellow-gold Rolex Daytona featuring what collectors have dubbed the Tiffany dial, also known informally as the Tricker's dial, surfaced on the gray market with a staggering markup of approximately 450% over its official retail price. This dramatic premium immediately drew attention to Rolex's continued strength in the pre-owned marketplace, particularly when most luxury watch brands were showing signs of stagnation or decline. In this video brought to you by the Luxury World, we will discuss the current situation of the king of watches, the Rolex. Join us in this exploration. If you have not subscribed to our channel yet, make sure to do so to stay informed on future updates. Recent data from trusted watch data source indicates that the broader secondary watch market saw prices decline by just 0.4% in quarter 1 of 2025. Though still negative, this figure marks the shallowest drop in resale values since quarter 2 of 2022. The majority of this resilience can be attributed to the dominant performance of the three premier luxury watchmakers, Audemars Piguet, Patek Philippe, and Rolex. While many competitors posted lackluster or outright poor results, these three brands not only held their ground, but emerged as the strongest performers in the sector. Rolex's modest 0.4% appreciation this quarter can largely be attributed to consistent demand, particularly among its most iconic models. The Day-Date experienced a 1% increase in secondary market value, while the Datejust rose by 0.8%. Models such as the Yacht Master, GMT Master, and Oyster Perpetual saw more modest gains, each climbing by less than 1%. These increases coincided with the run-up to Watches and Wonders, the premier springtime industry event that often fuels speculation, rumors, and strategic acquisitions ahead of anticipated model discontinuations. In contrast, Tudor's 2% dip, while seemingly negative, actually places the brand in the middle of the competitive field following a difficult 2024. The performance is notable primarily because it occurred within what analysts describe as a soft market, an environment where increased supply or diminished demand grants buyers more negotiation leverage. In such markets, inventory tends to stagnate, showroom traffic slows, and sellers are more inclined to reduce prices or offer incentives. By this definition, much of the Swiss watch industry continues to face challenges in converting stock to sales. This makes Rolex's relative strength all the more striking. In environments characterized by subdued demand, value retention becomes a critical metric. Rolex has consistently demonstrated superior resilience in this regard. When viewed over a full 12-month horizon, the average Rolex trades at a 15% premium over its original retail price, placing the brand at the apex of the value retention leaderboard. For context, Patek Philippe maintains an average premium of 12%, while Omega, despite being a top 10 brand by sales volume, hovers near break-even in resale value. Value retention serves as a practical metric for evaluating the economic durability of a watch brand. It is calculated by dividing the average secondary market price of a watch by its official retail price, and then subtracting 1. For instance, a Rolex Submariner with a retail price of $9,600 that sells for $11,500 on the secondary market would demonstrate a value retention rate of approximately 20%. Recent data further illuminates Rolex's dominance. Although headline value retention dipped slightly by 0.2 of a percentage point, like-for-like analysis, which isolates performance among models present in both the current and previous datasets, showed an identical rise of 0.2 percentage points. This method filters out the distortion caused by catalog updates, such as discontinued references or new releases, offering a clearer picture of underlying market strength. For example, Rolex's removal of 15 Oyster Perpetual references in January 2025, including the colorful Celebration dial models, artificially dragged down average values. Yet, when excluding those discontinued pieces, the retained watches appreciated modestly, reflecting sustained consumer demand. Within Rolex's current production catalog, comprising 131 models, not including newly released variants like the 2025 Land Dweller, certain lines stand out as high performers. The GMT Master leads the charge with an astonishing 39.6% average premium over retail. Models colloquially known as the Batman and Sprite remain especially elusive and highly sought after. Close behind is the Daytona collection, posting a 38% premium regardless of case material, ceramic, steel, or otherwise. Interestingly, the Oyster Perpetual line, often labeled an entry-level offering within the Rolex hierarchy, has also performed exceptionally well, commanding a 30.6% average premium. This contrasts sharply with more traditional choices like the Datejust, which holds an 11.7% premium, or the Submariner at 14.1%. At the lower end of the spectrum, the Gold Heavy Day Date registers a negative 2.3% in value retention, while the Deep Sea Dweller, a large and niche offering, lags significantly with a decline approaching 15%. These figures reveal a distinct divide in market performance. Sport-oriented models are driving high premiums, while heavier precious metal pieces are more susceptible to macroeconomic headwinds. This bifurcation provides important strategic insight for collectors and investors assessing which pieces are more likely to retain or increase in value over time. Another key development in reshaping the Rolex market is the brand's certified pre-owned CPO program, introduced in December 2022. This initiative marks the first large-scale CPO program by a high-end watchmaker, offering authenticated used Rolex watches that are at least 3 years old. Each timepiece undergoes a thorough inspection, is repackaged in official Rolex presentation boxes, and comes with a 2-year international warranty. Additionally, each watch is tagged with a green Rolex seal, certifying its provenance. This program has expanded significantly, now reaching over 200 retail locations worldwide. By formalizing and standardizing the resale process, Rolex aims to exert greater control over its secondary market, elevating consumer confidence while potentially dampening the influence of unauthorized sellers. However, the program's initial momentum appears to have stalled. Contrary to earlier projections, the number of retailers participating in the CPO program has declined. This drop-off suggests that dealers may be reluctant to commit inventory to a platform that, while reputable, often demands premiums roughly 30% above comparable non-certified listings. For many buyers, price remains the deciding factor, making traditional gray market channels more appealing despite the lack of official certification. Further examination of Rolex's CPO inventory also reveals a curious trend. Although the GMT Master and Oyster Perpetual lines are currently the strongest in terms of value retention, the majority of CPO inventory comprises Datejust and Daytona models. This disconnect between market demand and CPO supply raises questions about allocation strategy, dealer incentives, and long-term effectiveness of the program. Taken in totality, Rolex's performance in the first quarter of 2025 underscores its unmatched position in the luxury watch sector. In a climate where even established brands are struggling to maintain price stability, Rolex has demonstrated modest but meaningful gains. With robust value retention, strategic model allocation, and a forward-looking approach to the certified pre-owned market, the brand continues to separate itself from the broader industry landscape. Looking forward, sustained collector interest in professional models, strategic scarcity, and careful catalog curation will likely continue to support Rolex's strong secondary market performance. At the same time, the brand's CPO program, while still evolving, represents a critical pivot in its effort to formalize and legitimize the pre-owned watch ecosystem. As competitors attempt to regain footing in a softened market, Rolex appears not only resilient but increasingly dominant. In conclusion, Rolex's Q1 2025 performance affirms its leadership role within the luxury watch sector. By maintaining modest gains amidst industry-wide softness, outperforming on a model-by-model basis, and asserting control over its secondary market presence through the CPO initiative, the brand solidifies its reputation as the benchmark for value retention and desirability. The data indicates that while the broader market remains under pressure, Rolex continues to command exceptional liquidity, collector confidence, and investment appeal. What are your impressions on the Rolex topic we shared in this video? Let us know by leaving a comment and giving this video a thumbs up. Do not forget to subscribe to the Luxury World for more insights into the world of luxury timepieces.